Fidelity is helping lead the charge on actively managed, non-transparent ETFs, and here to break down this pivotal shift in the ETF industry is Greg Friedman. He is the head of ETFs at Fidelity. Thanks for joining me today, Greg.
Thank you for having me.
All right, so first off, because this is a really big new development in the space, tell our audience a little bit about what exactly is an actively managed, non-transparent ETF.
Well, first of all, I'd like to change the terminology a little bit. It's an active equity ETF. The invention and how we've been moving forward through the SEC, they've named it non-transparent. But in our minds, non-transparent or semi-transparent really aren't the right ways to look at these products. So we are at Fidelity calling these active equity. And what they do is they round out the toolbox that the industry has. The industry's had beta or passive ETFs for decades now. They've had smart beta, they've had active fixed income, which have been transparent, and now this is the last piece of the toolbox that's been missing for our clients and our investors is the active equity ETF. So it's a really exciting development for the industry.
So what is different about this than what you could get with an actively managed mutual fund, for instance?
Well, you get the same sort of strategy. So at Fidelity, we're taking the same strategies in some cases, or in some cases different new strategies, and put them into an ETF form. Our first three products we've filed registration statements for, and they will be clone-ish type products of existing mutual funds. But we're really wrapper agnostic at Fidelity. So we want to bring the best of Fidelity, our insight, our fundamental research to our clients in whatever wrapper they would like. In some cases might be an SMA, some cases might be an ETF, some cases might be a mutual fund, because each fit a different need and a different purpose for a client. And there's been a lot of talk in the industry about this is the end of mutual funds, and it couldn't be farther from the truth. The mutual fund has a purpose where you can have some investments in a mutual fund you can't have in an ETF. Some platforms, the mutual fund works better than the ETF, but with the growth of the ETF hitting $4 trillion, this has been the one asset class within the ETF industry that hasn't been available to clients. So this is a very exciting development for the industry and for us at Fidelity.
Talk to me about the transparency aspect and what exactly is the deal with that in terms of, again, this is a little bit different than many of the traditional ETFs, which one of the draws, in addition to low cost, of course, is that transparency factor.
So in a traditional passive ETF, it's a pro rata slice of the basket or the portfolio every day. In this case, we are producing a basket every day, but instead of having a perfect correlation or pro rata, it's a proxy. It's a proxy basket that allows us to hide some of the fundamental secret sauce to trading strategies that protect our shareholders. We will release enough information that allows market makers to make effective and tight spreads on our product. There'll be the normal disclosures through our disclosure policy that allows investors insight to what's in the fund. We're going to be producing a bunch of information and stats that allows investors to get a really good sense for the first time of what's in their portfolio. So while we will not have full daily pro rata transparency, there'll be a lot of transparency in the product that makes the product effective for trading, as well as effective for hedging, and create a really good experience for our customers and our clients.
So then do you see the primary benefit of this being that ability to hide that secret sauce and how that translates not only to performance, but then I guess the fees that you're able to associate with this?
It's not so much a fee discussion, but it's, we have this insight, it creates excess return. We don't want to give that insight away so someone can take it away from our clients. We implement a trading strategy not just for this fund, but across all the Fidelity's mutual funds and investment products. So we're very careful with our intelligence in terms of the IP behind a fund or the trading. And we need to protect shareholders, not just of that particular fund, but shareholders across the Fidelity enterprise. So this methodology that we've created that we're also licensing to other asset managers allows us to get the Fidelity active story into a different wrapper for the first time, but protect shareholders across the Fidelity network of our intellectual property as well as our trading strategies.
Speaking of methodology, can we get into that a little bit more and where you see Fidelity fitting in the competitive landscape with the other players in this actively managed space?
Sure, there's been five applications total that have been approved. One by Precidian, which is a blind trust methodology, and the other four are proxy baskets. they're all good methodologies, they're all going to work, all really developed thoughtfully over a decade with these asset managers and the SEC. Where ours is a little bit different is ours is very simple, it's elegant, it fits into the ETF ecosystem today. It has ETFs and stocks in it. It is really focused on how to create the best price return for a proxy basket versus the portfolio. We're not forcing overlap. It feels like an ETF, acts like an ETF without any extra plumbing, without any new participants into the ecosystem. So that's part of it. But as I take a step back, they're all going to work to a certain degree. But what differentiates Fidelity is our platform. We have the name, we have the brand, we have an ability to educate clients and an obligation to educate clients. So the approach we're taking is we like to be the home where active ETFs are traded. We like to license our product out to other key asset managers and really focus on client education, benefiting the clients, tools, data, whatever that makes the client's experience that much better. So that's really where our focus is.